Good afternoon or good morning, depending on where you are in this lovely country of ours. Hopefully you're a little bit warmer and have less snow on the ground than I do. I'm in New Hampshire and I have still about 6 to 8 inches and about 6 to 8 inches coming on Saturday. So fun times. Welcome to MSO's first webinar of 2025, Professional Ethics, Not Just for Agents, by MSO's own me. I'm Sue Quimby, Senior Vice President of MSO Inc., and I'm also the National School Director for MSO. Joining me as host are CEO President Jan Seitz, and providing technical assistance are Cassidy Cody and Mary Beagle. As a reminder, all attendees will be muted. If you have questions or concerns, please enter them in the chat or the Q&A window. If you have trouble, please message me in the chat, and Cassidy or Mary will be both watching for the chat to see what questions come up or issues. My cell number, if you're desperate and get locked out, is 908-328-3404, or if you have other issues. This class has been approved for 3 CE in multiple states. You should have all gotten a note this morning about which states were approved in and which were not. As mentioned, some of the more challenging states to become filed in, we are still working on, and we hope to do this again later, maybe either, if not later in the year, but at least on a yearly basis. The number again is 908-328-3404. That mean you're going to spam me, Florence? So I have a couple people that are signed on as a number. Thank you, Mary. A 330 number and an 856 number. If you are requiring CEs, please somehow let us know who you are, because it won't match with the registration lists. Yes, we are working on getting licensed in Minnesota, and once we do, I know I have a couple people that want the class, would like to have it in Minnesota. Okay, so there will be at least 3 poll questions per hour. They will be unannounced. Your attendance and your participation will be monitored electronically. So I'll run a report at the end of the class about who attended, how long you attended, and whether you answered poll questions and which ones you answered. So if there is a problem, please let us know. Yes, Michigan's another one that we're working on. If you have not provided your license number, national producer number, and state, please enter them in the chat or email them to me at squimby@msonet.com or school@msonet.com. As you know, if you don't answer the poll questions, you may not get credit. Your participation is greatly appreciated. Please use the chat for questions, comments, or just to participate. Please take a minute to note the antitrust statement. I know how exciting this all is, but obviously we're not going to be sharing information about different companies and how people do things. We won't be talking about rates or any kind of competitive information. Next is the disclaimer. Copies of these are available upon request to any of you who have trouble sleeping at night. The required Virginia course introduction was mailed to all registrants that were listed as of March 24th. This course is approved for 3 Ethics CE in Virginia. If you need a copy of that intro certificate, let me know. We would like to thank our generous sponsors listed on the screen and our website. They help us provide these quality educational webinars, ed seminar, and golf outing. Annual event sponsorship opportunities are still available. Our 30th golf outing will be in May. Contact us for more information. We are pleased to offer at least three CE webinars each year, plus a 3-hour ethics course. We welcome suggestions for presenters and topics for our webinars. If you missed any previous webinars, they are available for on-demand viewing on our website, msonet.com. They'll also be available on our YouTube channel, at the Mutual Service Office. Please subscribe to the channel. It's free. And we will list the website, YouTube, and LinkedIn addresses in the chat during the presentation. Our school is now licensed as of this morning in 37 states. We just got Kansas today. We are making progress. The goal is to be in all 50 states by the end of the year. Our Ed Seminar this year will be held virtually on November 18th and 19th. Our topics will include religious institutions, fraud, and 2 hours on emerging issues from the legal and coverage perspectives. We welcome suggestions for topics and presenters for all of our CE sessions. You may have seen our training flyer. We offer CE and non-CE training for member companies, agents, and other industry members. In 2025, our goal is to be licensed as a school in 50 states, and we hope you will contact us for more information if you'd like to run a class through us, or if you'd like to take a class, or would like to more information. About the webinar, we're talking about ethics. As you know, ethics is required for everybody. That's why most of you are here. Despite my charming personality and teaching, I know that most of you are here because you need the credits. But it is an important issue, because if it weren't important, they wouldn't be required in every state. Ethical behavior sometimes is lacking, isn't it? We see people who we've worked with who've done bad things and probably should have been in jail, and probably some political people that probably should be in jail, but on both sides. So it's people are not ethical, and that impacts how we live our lives. About the presenter, I joined MSO in 1991 and have advanced to the role of Senior Vice President, Media, Client Relations, and Product Development. I'm also the National School Director. I started my career as an agent in an agency, and worked for a few agencies. I work now with other members of the team and help with MSO clients at creating and filing and personal and commercial insurance products. Most of my job is this school right now, but I've also written over 200 articles that are published in industry publications. I'm a frequent trainer for MSO and other organizations on insurance, CE, and leadership topics. I have the CPCU, AU, CIC, CPIW, DAE, CLPA, and ACR designations, and I'm almost done with my AIS. I've been in the industry since 1977. I'm active in numerous industry organizations, which is I know some of you people from, including CPCU, PAMIC, and International Association of Insurance Professionals, where I'm currently the International Secretary. I've received numerous awards, including IAIP Insurance Professional of the Year, and I also now live on a 275-acre farm in New Hampshire with my husband, my Labradoodle, and my 8 chickens. So without further ado, we're going to start talking about ethics. If I can share my screen. Everybody wish me luck. Everybody see it?
Yes.
Okay, good, because I can no longer see the chat or the other stuff. So thank you for your thumbs up, people. This course was based on an IAIP course called Professional Ethics, Not Just for Agents, which is now called Ethical Foundations for Insurance Professionals. That course is a 4-hour class. So this is a condensed 3-hour version that people could also take and get credit for under that organization. But often polling organizations like to find out how people feel about ethical standards of various industries and various professions. The survey suggests that as few as 12% of consumers rate the honesty and ethical standards of insurance sales professionals as either high or very high. We seem to get the brunt of a lot of this, don't we? A lot of the complaints, a lot of the issues, a lot of the bad things. When a disaster happens, people don't think about all the good we do. They think about, oh, well, I didn't get my claim. Or, oh, if you look at California, the wildfires, well, how many people didn't have insurance? And they blame it on us, which may or may not be true, right? Almost 90% of consumers rated insurance professionals as less than high, and from an ethical perspective, generally place insurance salespeople near the bottom of the surveyed professions. We're down there with the car dealers, right? The insurance profession clearly needs to address this unfortunate perception. We are sometimes our own worst enemy. We're not able to promote the good that we do, to promote the value we give to society, because people couldn't exist and couldn't do businesses and couldn't own homes and couldn't drive cars without the insurance industry. They don't always think about it. They think about, oh, I'm paying all this money and I'm not getting anything back. Well, peace of mind has to count for something. An important part of affecting such a change in perception lies in ensuring that insurance producers understand the ethical principles that should guide their professional activities and what, in general, those principles require of them. This module is intended to keep you increasing your knowledge and how to provide that understanding. We're going to talk about the 6 ethical principles: competence, integrity, fairness in dealing with your clients, diligence, professionalism, and confidentiality that serve as the foundations of ethics for insurance producers. In so doing, it will consider what each of these principles requires of insurance producers. And by producers, it's not just producers, it's company people and claims people and adjusters and anybody that's involved in the process. So hopefully, once you've gone through this module and have stayed awake, we'll be able to describe the benefits of adherence to ethical principles enjoyed by clients, insurers, and insurance producers, identify requirements imposed on insurance producers by your need to maintain competence, explain what professional integrity is, discuss professional implications of the requirement for dealing with clients equitably, we have to be fair, describe what the ethical requirement for diligence is for dealing with client mandates is, explain requirements imposed by the need to maintain professionalism, and identify requirements and limits of client and insurer behavior and confidentiality. So right now we're going to be talking about the broad subject of ethics and these ethical principles. In our discussions, we'll just consider what each of them requires of us as insurance professionals. And wants to know that they're perceived by others whose opinion they value, and want to know how we're perceived, don't we? Actually, everyone finds that important. So as we said, other people tell polling organizations how they feel about various professions. Harris and Gallup are some of the better known polling organizations. There are probably others. I know there are others out there. They take periodic surveys designed to uncover how consumers rate the honesty and ethical standards of the practitioners of various professions. Who do you think What professions do you think are generally considered to possess the greatest honesty and highest ethical standards? You can put your comments in the chat if you'd like to participate. I see we do have some comments in here. Teachers, judges, doctors, everyone. Law, banking, judges, agents, doctors, veterinarians. Okay, so we've got a bunch of different ideas. Well, let's see what the survey says. Members of the helping professions are perceived to have the highest ethical standards. Nurses are number 1, which kind of makes sense to me, because the nurse is who you have most of the direct contact with, don't you? If you're in the hospital or even the doctor's office, you may see the doctor for 5 minutes, but you see the nurses all day long. So physicians are up there too. Veterinarians, I think somebody put that in the chat. Pharmacists, dentists, are the ones that are shown at the top. So, although respondents' perceptions of honesty and ethical standards may vary somewhat from year to year, according to polls taken by the Gallup organization, nurses lead all professionals with respect to their perceived honesty and ethical standards. 80% or more of the respondents generally believe that nurses have the highest ethical standards, very high or very high. And it's usually in this same order. They include information in these surveys about the respondents' perception of the members of other professions as well. Lucky us. Of course, of primary importance is our perception as a group. Only 10 to 15% of respondents rate the honesty and ethical standards of insurance salespeople are high or very high. As we discussed before, we have a really bad image problem. What happens? It's negative perception. Makes it more difficult, makes our jobs more difficult, doesn't it? You're just trying to get one over on me. You're giving me bad coverage. You're charging me too much money. So it could be harder to get a prospect, to get a sales appointment. Maybe harder to get people to share their information with you. Maybe they won't tell you the truth. How much are they really doing in sales? How much is their building really worth? How many employees do they have or not have? And with contractors, that's often an issue, finding out whether they actually have employees or not, because all these one-man operations that are doing big jobs, somebody's doing the work. So you may get fewer sales. So hopefully, if we can improve our perception in the industry, these improvements can help us yield benefits to all parties in the insurance sales transaction, from the client to the producer to the underwriter to the claims people to everybody that may be involved. Clients will more readily rely on our recommendations. They may trust us more, knowing they're fully informed. Insurers can expect to avoid the enormous settlements arising from unethical sales practices. What benefits do you think insurance producers may enjoy as a result of their focus on providing professional services honestly and ethically? Do you have any thoughts on that? You say good reputation in the industry community, increased sales, truth, referrals, more sales, referrals, satisfied customers, repeat clients. So word of mouth, continuing contacts, goods are all great answers. Talk about avoiding financial risk for unethical practices. Because if you're doing something unethical, if you're going to go to jail, you may lose your license, you may lose your business. Avoidance of your risk to reputation. If people don't think you're honest, or people are going to, nowadays too, with social media, word of mouth is everywhere, isn't it? You can really ruin somebody's reputation very easily. And you could have a marketing advantage if you're seen as more ethical or better servicing your clients than your neighbor down the street. You may get that business. Clients will more readily rely on our recommendations, knowing they're fully informed. They can avoid enormous settlements arising from unethical sales practices. Almost as important as the financial risk is the marketing advantage, because you can differentiate your practice based on your ethical focus. Wouldn't you think it'd be more reasonable to expect a client to entrust his or her property or family's fortune to you if you feel that they feel they can trust you? If they're known for your high ethical standards. So now we're going to talk about principles of ethics. And these should be the foundation for any insurance producer's practices. What are the principles you can think of? And you may know we mentioned them a few minutes ago. There's 6 of them. Competence, honesty, integrity, ethical, honesty, confidentiality, diligence. You guys are paying attention. Integrity, ethical. Good job. Yes, yeah. And here they are. Competence, integrity, fairness in dealing with clients, diligence, professionalism, and confidentiality. They're the 6 foundational principles, and they should govern how we work every day and how we deliver our professional services. They're general statements that talk about the standards of professional conduct, and we're expected to display, and you can use them as a guide. Let's examine what each of these principles requires of an insurance producer. Competence has a range of meanings, doesn't it? Depending on how it's used. If you're in a legal situation, saying competent, are you competent to stand trial is a little different than competence to be able to perform your duties as a sales professional or insurance professional. In a criminal, if you're in a criminal case, if you're not competent, it means you can't understand the nature of the charge and that cannot help in your own defense. No, certainly not talking about this in ethics. What do you think competence means if you're talking about an insurance professional and ethics? Capable, okay. Someone who knows what they're doing, knowledgeable, knowing client, knowing coverages, understanding your business, understanding coverage. Good. Admitting if they don't know, that's really important, isn't it? Understanding the different forms. Knowledge is key. Yes, it is. So all good answers. So competency, skills, knowledge, and qualifications. Many of us have extra designations, and that kind of shows our competence. I know as a woman in the insurance industry back in the 70s, it was important to me to be taken seriously. So that's why I started going for my designations. Saying, oh well, she must know something. She's got these designations. So it kind of worked. That's kind of how I got this job by the people I've met through the different designations and insurance professions and professional organizations that I was a part of. Knowledge to where to find the answer if you don't know, understanding customer inquiry and provide them with answer, even if it means research on our part to get to the answer. It's not a crime to say, I don't know, let me get back to you. I try to do that a lot of the time, unless I'm absolutely sure what the answer is, because the answer can change depending on the exact situations. So competence refers to the possession of all those attributes. When used in connection with ethics applicable to insurance producers, the principle of competence requires both technical knowledge and sales skills. You have to be able to share what your information and provide the right coverages. So the knowledge we must possess includes an understanding of the features and limitations of the insurance products. People mentioned that in the chat. And the client benefits provided by these products. What's the difference between a higher deductible, or higher coverage limit, or broad versus a special, or versus a basic? Every competent insurance producer must also possess certain skills. They enable the producer to get all the information they need so they can assess the suitability of your product to what the insurance needs are. If you don't know what the risk is, how do you know how to cover it? You can't just throw a bop on everything, as easy as it may be, and you just can't always do that. You need to customize it. Ethical insurance producers are also expected to commit yourselves to continually increasing your knowledge and skills through ongoing education efforts. And obviously, if you have a license, you need to have your continuing education. You have to have ethics, but not everybody here has a license. Some people want because they like the information, they want to learn more. Some of us are retired and still doing continuing education. So competence also prohibits an insurance producer from providing services in areas outside his or her expertise or legal authority. Don't ask me about life and health. I don't know. I can't help you. Also, you're also licensed, unless you're licensed to provide legal, accounting, appraisal, or other professional services and have the necessary expertise to do so, you should not offer such services. It's unethical and it may be illegal. Amen. Ditto. Yeah, everybody agrees with that, right? Integrity. The second important ethical principle we will discuss today is integrity. How would you describe somebody who has integrity? What words come to mind? Doing what's right even when no one is watching. That's a good one, Dawn. They always do the right thing for others, honest and reliable, trustworthy. Willing to say you don't know the answer. Think of people you know that have integrity. There we go. Honesty, candor, client's interests, unbiased, moral, objective, candid, more honorable, and trustworthy are all some of the other ones that we come up with. So you guys are doing really well. Good participation. I don't think I don't feel like I'm talking to myself. That'll come later in the middle of the night when I'm talking to myself. We usually describe a broad range of attributes to someone we consider as having integrity. We think of integrity as the term used in the ethical principles of applying to insurance producers. We mean honesty, candor, and consistently putting the interests of the client ahead of our own. And we used to have, I know when I was in agency, they used to have sales contests. And if you wrote so many policies with a one carrier, the agent would get to go on a trip. And so it was a common practice back then that people would, put insureds and clients with that company and sometimes cancel and rewrite them so they could some carriers still do it. Yes, I thought so. I haven't been in the agency side for 30 something years, but I figured they probably do. And so there was a lot of times people would cancel and rewrite with another carrier, and it might not have been the best coverage for them. So to me, is not ethical. Customers before contingencies. I like that, Tracy. So you have to keep the interests of the client alone, ahead of our own. Clients place a lot of trust in us, don't they, in our recommendations? Because nobody understands insurance. Come on, be honest. We're all insurance professionals, and we don't read our policies. Do you? Do you go through and read your policy? Nope. Nope. I know I haven't done it that often, and that's what I do for a living is read insurance policies. Like, why would I want to spend my 3 hours of time off at night reading my insurance policy unless I had to? Only have a question or thought. And a lot of times, well, actually, my agent was going to be on this class, but she couldn't. But I'll call them and say, hey, this is what I'm doing. What can I do? What do you think? It's also good to have feedback from somebody, right? Because they're dealing with it every day. When I was an agent, I knew all this stuff. You ask me that question, I would know, okay, this is what you do with it. This is how you place it. This is how you cover it. This is the best way to do that. Well, I'm not working with companies that way anymore. So I don't have the experience and the knowledge and the up-to-date knowledge that I would need. The source of the trust is the client's belief in the insurance producer's integrity. Integrity, integrity, integrity. And once you lose it, it's hard, right? And they say it takes 10 attaboys to negate one gotcha, one thing you do wrong. It takes 10 good things to do that. And people, if you do something wrong, somebody's going to more likely to tell everybody else, aren't they? Tell a lot more people how unhappy they are. I know I'm that way. If I'm mad at somebody or I feel somebody has treated me wrongly, I will say it to them. I will say it to my friends. I will say I'm never going to buy a car from that person, blah, 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 because they tried to mess with me. I'm cleaning up my language for the general public here. So the integrity has important implications for us. We're prohibited from engaging in any act that is dishonest, deceitful, or fraudulent in connection with providing their professional services. These acts are unethical, whether or not the client is harmed by them or even knows about them. We're under ethical mandates to correct any client misunderstanding with respect to the services provided to the producer or provided by them. If they don't correct the client misunderstanding, that's unethical. They don't understand. Common example, something like percentage deductibles. How that's going to impact you versus a straight deductible. I know when it was Hurricane Sandy, which turned into Tropical Storm Sandy before it hit my state, thank goodness. If it had been a hurricane still, I would have had an $8,000 deductible for the damage to my roof. instead of the $1,000 that I had because it was a tropical storm. But people don't understand that. They don't understand these percentage deductibles. Even though we try to tell them and we put things on the front of the policy, flood is another one. They don't understand why they don't have flood coverage. And basically it's because you need to have specific flood coverage in most cases and not just covered under your homeowners. The need for product producer to be honest and candid, imposed by the need to provide professional services with integrity, obviously applies to all communication you have between the producer and your client. It means more than just avoiding telling the client a lie. You must not communicate any information that is false or misleading, whether done directly or indirectly, concerning your product or your benefits, or the services to be provided, or your qualifications. You also have an ethical obligation to disclose facts to a client in those cases where a failure to disclose would mislead the client. If you're doing a comparison of policies and they say, okay, well, this is a percentage deductible and this is a straight deductible, that's a good example. The percentage deductible is the premium is probably lower, but it's a higher payment that the client's going to have to make. Now we'll talk about fairness. What does fairness require when you're delivering professional insurance services? What do you think? Treating clients the same, full transparency. Let's be fair. Equity. Same across the board. Everything's so. Impartiality, intellectual honesty, and transparency. I think all most of those things are things that we saw in the chat. Fairness imposes an ethical duty on producers in your delivery of professional services, to act impartially and with intellectual honesty and transparency. Let's talk about each of these requirements, shall we? It's not one size fits all. We all know that, don't we? You don't have to treat all clients the same. It means you have to treat them fairly. Their needs and objectives are different. When we say the producer must act impartially, it means the producers are expected to exercise disinterested professional judgment, basing their actions and recommendations on objective criteria. You can deliver their professional services dispassionately and free from bias that may affect your client recommendations. So you're required to subordinate your own desires, prejudices, and feelings in order to achieve an appropriate balance of conflicting interests. Because you may not even like the person that you're working with, but you're still required to treat them fairly and with impartiality. Intellectual honesty means you have to restrict the actions of insurance producers that are somewhat similar to those imposed by the need to be impartial. When we think of intellectual honesty, what characteristics come to mind? Okay. All right, somehow we got to the wrong. Unbiased, pursuit of truth, unaffected by personal beliefs, objectivity, honesty, humility, acknowledgement of others' ideas, and willing to question assumptions. Because you may not have the right answer. You may not be looking at it the right way. But intellectually honest could be characterized as unbiased, displaying objectivity and humility. They might also render professional services based on objective reality, and recommendations would not be unaffected by the bias of personal beliefs. You'd be humble and willing to accept questions people challenging you as to what your assumptions are, because there may be new evidence. Fairness requires transparency in rendering professional services. What do we mean when we speak of transparency in a social context? Open-minded, openness, being clear about the facts, clear and direct, clear and concise, clear. Kind of seeing a theme here, huh? Openness, communication, and accountability. Tells the whole story. Clear, understandable explanations. In a social context, we're referring to several characteristics, including openness, communication that accompanies it, and the ability to identify the person accountable for, so that you know who's to go, who you should be talking to, who you should ask the question to. In insurance, it's the openness of the transaction, the clarity that you have in the communication that you make to them, and providing full disclosure, and to your acknowledgement that you're responsible for the suitability of your insurance recommendations. So we're trying to satisfy ethical principle of fairness. We need to completely be open with the client concerning our professional relationship and the services being offered. You must make recommendations that are suitable, and you must act solely in the client's interests. Next, we're going to talk about diligence and professionalism. When we think of diligence, what do you think about? What comes to mind? Hardworking. Yes. Commitment, dedication, working hard, and exhausting all options, or just exhausting, right? Not a quitter. Their homework, staying on top of responsibilities. These are all great answers. Yes, all these personal attributes. Strong work ethic, attentiveness, persistence, steady application, untiring. Talking about professional services, we require that services be performed in a manner that can be characterized as prompt, careful, and with sustained effort. You must ensure that your client data gathering properly identifies all the facts that you need. And when I was back in an agency, I was very famous. I was working with new business producers, and God bless them, some of them didn't really know anything about insurance. And I came up with all kinds of questionnaires because they would say, well, they don't have a boiler. And I'd say, well, they have computers, right? They have electrical systems. So that was back before boiler machinery was not, which is now called equipment breakdown, probably because people didn't understand that it was just boilers. Umbrella, flood, all these things that people say, oh, if it's going to cost me more money, I don't want it. And then as soon as they have a loss, oh, if I'd known about it, I would have gladly bought it. Sure. So that was when I came up with all kinds of questionnaires. I said, I don't care what you sell them, but you're going to make sure they sign off on all these items, that they understand it and that they don't want the coverage. And it saved my butt in at least one instance when somebody didn't want coverage, specifically adamant he did not want the coverage on his new boiler, and his new boiler failed, and he went right up to the company itself and said, well, so why wouldn't I cover both buildings? Blah, blah, blah. And I had my stack of email. That was back when you had the pink little pad. Some of you are probably too young for that, but your notes that you'd write for phone messages. I'd sent him letters saying this is what we're covering. His answer was, I don't read my mail. I said, you're a dentist, you know how to read. But the company backed me up because I had documentation. And that's kind of a part of ethical behavior too, is document it. So you can go back and help your company or your agency if there is a case or if there is a claim that somebody's not being so ethical because they had a claim that they didn't pay for coverage for. Pink phone, message paper, and carbon pads. Absolutely. Yeah. Fax machines. Does anybody even use faxes anymore? So only recommendations suitable for the client are made, and the implementation of client-approved plans is completed with reasonable speed. Try to get back to them as soon as possible. Professionalism refers more to the manner in which an insurance producer behaves when providing professional services rather than the content of the services themselves. So when we refer to the requirements of ethical principle of professionalism, we mean insurance producers are expected to act with courtesy and dignity in their professional interaction with their clients and their colleagues and their other professionals with whom they come in contact. So try to behave ourselves and avoid humor unless it's somebody you really know. I mean, because you don't want to offend somebody. You want to be a professional and above board with everybody. Let's talk about some of the practical applications of the principle of professionalism. We use faxes some, but are not reliable now. I mean, email is preferred so documents get to the destination. Yeah, that is true. Email is preferred. When you talk about gathering client facts and client information, don't do it over text or social media, because how are you going to document that? It's going to be extra steps, and the chain of evidence in the trail could be lost. So it's you're all well and good that you're friends with somebody and they want to text you or they want to Facebook message you or Twitter or X, I guess it's X now, or Instagram, but try to persuade them to send an email so that way you can say and print the email and keep it in your client record. Copy and paste, yeah. So never borrow money from a client or lend money to a client. When clients come, yeah, I agree. We write. They call and you're gonna have to write it down, but then you're gonna put your notes together and keep it in your file. Confirm back to them via email. Exactly. Whatever they shared via socials. That's a perfect way to do it, Tracy. Not surprising coming from you. You just have to cover your own assets, don't you? Because once something happens, they're not going to remember what they said to you, what they told you, or what they swore they didn't need. They're going to say, I don't have it, and somebody has to pay for that. Don't borrow, don't be paying clients premiums for them. Coverage may not be bound by social media, right? Or by phone calls, can they? We have all these people in their voicemail answering machines as coverage cannot be bound or changed. You need to speak to a person. You can't leave me a message saying I bought a new car and think that that's going to be enough. Refrain from making unfounded or derogatory remarks about your insurers, your colleagues, your clients, or the professional advisors, unless you want to be sued. We promptly provide any requested information or documents to the clients, their other advisors, or other producers to the extent you're legally permitted to do so. Some things can't be shared, right? We have all the HIPAA and the privacy requirements. We have to be sure to follow that. Return client's property when requested as soon as possible, because you may have gotten some information from them. You may have blueprints or deeds or inventory lists or samples for a claim. Be able to send back those items as soon as possible. The last of the generally accepted principles of ethics applying to producers' delivery of professional services is confidentiality. Let's talk about those requirements now. What do you think are some of the requirements of confidentiality for insurance producers and their client information? Personal information, correct? You mean the fence post. I like that one. Financial statements, PPI, PHI, protect the information. Privacy, right? We have privacy requirements. Everything you know about the insured, pretty much, right? Permit only authorized access to information. Get them to sign off saying, yes, I will let you share my information with my accountant or my attorney. Authorized access requires client approval or legal mandate. The Confidentiality, as it applies to insurance producers, requires that any client information that is private can be disclosed in only two situations. They may disclose it when it's authorized by the client. Say, I'm going to share your information. I'm going to apply to this company, this company, this company. So that because you want to make a transaction requested by the client. The second situation, if it's required under the law, it may be a subpoena in a criminal prosecution. If there's an arson case, for example, there may be information that they're going to ask from, when did they increase the coverage? When did they reduce the deductible? Was it the day before the fire? Well, that's probably why they're having the subpoena. When we talk about confidentiality and its requirements for other professions, what professions normally come to mind? What other professions need confidentiality? I know you guys all know this. Lawyer, medical, education. Here's one that nobody's said so far. Medicine and journalism, right? How many times have we seen things in the news and about, oh, well, I'm protecting my source, I'm protecting my source. Many professions demand they maintain client confidentiality, either as a legal or ethical requirement. And these are the ones that we think of most often. Because the client must be trust and have confidence that their information is not going to be shared. It's not going to be on the evening news. So if I don't think you're ethical or that I can trust you, I'm not going to share my information with you. I'm not going to share my tax return. I'm not going to share my health information. So same thing with professional and there's some insurance producers. They think it's not going to be kept confidential. They're not going to let you, not going to share it. They don't want their competition to find out how much business they do, how much they pay their employees, their assets, their income, their tax status, all these things. This could really restrict our abilities to be able to service our clients if we can't get that information. So now we're going to summarize this module, and then we'll take our first break. It should be clear following our discussions that the benefits you can expect by ensuring your practice adheres to these generally accepted ethical principles can be substantial. It can help you avoid the financial risks and the risks to your reputation that often accompany unethical behavior. Equally as important, your focus on maintaining a high ethical standard may enable you to build a significant marketing advantage. Let me briefly summarize your requirements. To competence, you require and maintain knowledge and skills needed to effectively deliver insurance services. Integrity, you provide these insurance services with honesty and candor. Fairness, you deliver insurance services with impartiality, intellectual honesty, and a full disclosure of any material conflicts. Diligence requires you to be thorough and careful in providing insurance services, and you provide them with appropriate promptness. Professionalism, you treat clients, their other advisors, and colleagues with dignity and courtesy. Confidentiality, you give access to client information only when necessary or only when authorized. Are there any questions or comments before we take our break? Seeing none, I will see you in 10 minutes. God willing, and the creek don't rise. In progress. Welcome back. I see that quite a few of you did return, so that's good to know. Now we're on hour 2, talking about ensuring understanding, talking about suitability and disclosure. In the first module, we talked about the benefits of adherence to generally accepted ethical principles as they apply to the delivery of insurance services. We concluded with the discussion of the principles to provide the foundation of ethics and the practical requirements for insurance producers. This second module will consider two of the principles of ethics, namely competence and integrity, and the requirements for suitability and disclosure in delivering insurance services to clients. We'll talk about the requirement incumbent on insurance producers to ensure client understanding concerning any proposed coverage and its issuer. And we've talked about that a little bit before. What's the coverage? Is it the same as somebody else's? What's the stability of the carrier? So anything that disclosures that should be made concerning the insurance company that's offering the coverage itself, and the illustrations employed in presenting it. Its tax treatment could be if it were a life or an annuity product, there could be tax treatments involved, alternatives that might be available, and a requirement that we have a balanced disclosure of advantages and disadvantages. There are advantages and disadvantages to everything, but it's up to the client to decide which advantages outweigh the disadvantages in any given circumstance. And we'll talk at the end of the discussion of suitability, how this involves our clients and our insurance products. Hopefully you'll be able to explain the meaning of full disclosure and how it applies to the sale of insurance products. Talk about additional disclosure requirements for professional and services and impaired clients, and talk about factors to be considered in performing a suitability analysis. For the next hour, we'll discuss two topics that have considerable ethical significance for insurance sales and other financial products: disclosure and suitability. Before we look on the requirements that our ethical principles impose on us, let's talk about some historical background. There's a legal doctrine which businesses generally conducted business at the beginning of the 20th century. Does anybody know what that it was? Sure, you have all heard of, yes, thank you, Florence, caveat emptor. And what that means is buyer beware. Yes, very good. Let the buyer beware. There's no implied warranty. You got what you got. I'm selling you this car, and if it falls apart driving out the parking lot, oh well. This was the prevailing legal doctrine in the United States and continued until the decade of the 1960s, where businesses manufactured and sold their products, and it didn't matter, right? There was no product liability. There was no recourse. Lemon laws, right? No implied warranty of fitness. You're expected to be sufficiently knowledgeable when you bought something that they were going to be good for you, that they were going to do what they thought they were supposed to do. Sellers didn't have any disclosure requirements. Contrast that with today, right? You have a coffee cup and says, this contents are hot. Don't spill it on yourself because you'll burn yourself, because of the legal things that have happened, right? The McDonald's case, among others. Buyers are generally able to hold sellers accountable for their product's failure only in two cases: if they provided a written guarantee, or if they could prove the seller was negligent in making or selling the product. Good luck with that, right? Who's going to go to court over a $25 item? I guess it depends on how much you spent on it, right? So if you had no written guarantee and it didn't work when you got home, well, you just throw it in the trash. You're out of luck. What if they were dangerous? How about all those toys as we were kids that we're not allowed to play with anymore? Like the lawn charts, where you were basically throwing missiles and arrows with your friends who were family members who were standing not too far away from you. What could possibly go wrong? Except for injury and death, right? If you could show in court the manufacturer was negligent, then it would be held liable for damages. In the middle of the 20th century, advocates for consumers said, hey, this is not right. There's not lack of safety, there's lack of consumer protection. So we significantly shifted the legal doctrine. Who knows what the next legal doctrine was? Horseshoes, yeah, horseshoes is another good one. At least they don't have points on them. They just hit you in the head and give you a concussion. Who knows what the doctrine that replaced caveat emptor was? Implied warranty loss, okay. Caveat ventator, let the seller beware. So you've got a 180-degree shift, haven't you? Now it's all being the responsibility and for making sure that the product is effective and that it works and it's suitable is now shifted to the seller. Hence, you've got your no more lawn charts. So by 1960s, unlimited product liability was applied to the manufacture and sale of many products that were deemed to present a significant risk of injury or death to consumers. No longer did the buyer of these products need a written guarantee or be required to prove negligence for their manufacturer to be held liable for their improper performance. So the unlimited product guarantee doesn't extend to insurance products in their sale. It should be clear that the current legal sentiment is far more consumer friendly today than in times past, right? It gives buyers an implied warranty of fitness and demands much more from sellers with respect to providing information about the products their clients purchase. In short, caveat ventator requires both appropriate disclosure and product suitability. I mean, you can't say, oh, well, here it is, take it or leave it. If it's not clear, if it's not understandable, it's going to go towards the courts are going to see and find in favor of the client because the insurance company was the one who provided the product, provided the language. And that's why we, as those of us who do this for a living, are always revising our language and making sure that everything is clear and understandable and that what's excluded is meant to be excluded. And it's a fine balance though, because you can't exclude everything. You have to provide coverage. That's why we're in business, but we also don't want to provide coverage for things that the companies are not charging adequate premium for. Coverage and illustration disclosures. We talked before about the ethical principle of integrity with the two important requirements about disclosures, the honest and candid in the delivery of services. If we're applying these practically, it means we have an ethical duty to ensure our clients are fully informed, whether they want to be or not, right? We have all the disclosures and all the things we can give them. If they don't read it, they don't understand it, we have a kind of a problem, right? What 4 areas do you think a producer has an ethical obligation to make their clients fully informed about? The insurer, right? The proposed coverages and exclusions, illustrations being used in presenting the coverage, and taxation if it's a financial product such as an annuity or life insurance policy. Or we have an ethical duty to ensure that our clients understand all the material facts concerning any recommended insurance transaction. Yet policy cancellations and non-renewals. If you don't pay your policy, are we going to send you a notification? Maybe, is the agent going to send it, or do you just get it from the insurance company? You must make a full disclosure of any material facts about the insurer, the insurance coverage being recommended, any illustration used, and the tax treatment to which the coverage is subject. And when we talk about insurers, well, you may have a cheaper policy, but that insurer it may be a surplus lines that's not rated or not regulated the same, or it could be a company that's got a lower rating, has a financial issue that could go out of business. We've seen it happen with some of our biggest companies that were really big when I first started in insurance 100 years ago are no longer existing. So, and if you had insurance with those companies when they went out of business, some of them went out pretty quickly. We had incidences like the Hurricane Andrew in Florida, which virtually wiped out some companies or pretty much wiped them out. It can happen very quickly. I used an important word in describing the disclosures. Material. What do you think we mean by material fact? Relevant, okay. Substantive, I guess that is what you're saying, Dawn. Pertinent and applicable, essential, important, impactful, based on what was provided, required. Right, let's see. Let's see what the course tells us. Important, relevant, and likely to make a difference to the client. I mean, the color of the paper that it's being printed on is not material. Whether the deductible applies as a flat deductible or percentage deductible is material. I seem to be on a deductible kick today, I guess. Yeah. And making a difference, likely to make a difference. If the client's not going to care about it, it probably isn't material. It's not going to impact their decision. It's probably not material. Be considered important to the client, relevant to their decision concerning the recommendation, and likely to make a difference in the client's decision to accept or reject the insurance producer's recommendation. Some people don't mind the risk. They, okay, I'll pay the cheaper premium, even though that company is not rated as highly. But you sure as heck better be sure you get it signed off on them, that they understand that this company is not rated as highly as another company might be. Because I mentioned before, they're not going to worry about it until they have a claim and it's not paid and it's your fault because you never told them. Because you're a liar. You never told them those things. So we talk about material facts. The most important in consideration is whether the insurer is likely to be in business and be able to make payment of any claims. What a concept, hey? We're in business to make always cover your assets, which I think I said earlier, right? Yes, I was very good at that when I was in an agency side, and it saved me, as I said. We need to disclose anything about the insurer's financial strength and claims paying ability that will enable the client to make a fully informed decision about using the insurer. The most valuable and readily available information are things like Moody's, AM Best, Duff and Phelps, Standard and Poor's. There are a number of rating organizations that can provide this kind of information, and some of them are going to be different too. So you sometimes have to judge and analyze which one is more relevant to you. So the ethically required disclosures are disclosures of information that will help the client to make the decision and make an informed decision. So it may depend on the coverage. It may have you may have different disclosures required, and maybe, and we can talk about it more. But some kind of things, like you said, deductibles, coverages, how fast they pay their claims, how financially suitable they are. You have to require anything that can be reasonably expected to be relevant to the client's decision. Exclusions, limitations, guarantees, risks covered, life insurance and annuities. You have computer generated illustrations. Like anybody that's bought life insurance, it shows you how much the coverage you'll have if you pay it over so many years, or how much coverage you'll have if you stop paying. How long will the coverage last? Can you recover the money? Can you cancel it and get money back? You get dividends, expenses that are taken out of your premiums. All these things are impacting your decision. Tax treatment. A lot of insurance products don't require tax treatment considerations, but they have to make sure, as we talked about before, life insurance, annuities, and other coverages may be impacted by taxes. What do you think should be disclosed concerning the taxation of these insurance products? Are the premiums taxable? Are the benefits taxable? You surrender it, withdraw it, or take a loan on it? You think about things like your 401k or some of your other benefits. Some of these things are pre-tax, some of them are after tax, aren't they? Makes a difference as to how you do them. So being proper for a producer to provide specific tax guidance, unless you have the appropriate expertise, if you're an accountant or a financial planner, then go ahead, go for it. But you could at very least tell them that there is an impact, or suggest that they talk to a financial planner. Are the premiums paid deductible or non-deductible? Are the benefits included in gross income? How the proceeds received under your policy as surrenders, withdrawals, and loans are taxed. So bear in mind, ethically, your objective is to sell the product to a client who is fully informed, because otherwise it's going to come back and get you, isn't it? So you have to talk about the alternatives that may be available to managing the risk. It may be, maybe they don't need insurance. Maybe they can retain the risk. Maybe they can have a higher deductible or lower deductible, depending on what their financial status is. So what alternatives are traditionally available to clients in their efforts to maintain and manage the risks you face? Avoidance, controlling, right? Retain, or transfer. Risks can only be managed by transferring them to a insurance company for a sane person or a person who's not a multimillionaire. Because if you want to sleep at night, it's nice to say, okay, my insurance will pay for that. But other risks can be managed in different ways. Avoiding the risk. Don't sell that product. You don't want to reduce the risk that you're going to die in an airplane accident. Don't fly in an airplane. Controlling the risks. How about kitchen fires? What kind of things can you do to control kitchen fires? Sprinklers, fire extinguishers. Yeah, they have those blankets, right? Now I think everybody in the world got a blanket for Christmas in our family. The ones you can put in the kitchen and just it puts out a fire, or you can put it in your car, it puts out a fire. Don't cook. That's not I wish that would be, but we'll cook every night, almost every night. I did buy KFC yesterday because my husband loves KFC. So, and I was literally next door to the KFC, so I had to go. I was getting my car fixed or not. Smother the blanket, yeah. But it was funny because everybody in our family got those blankets this year. But that's a way of reducing your risk, right? Some risks are impossible to control and impractical to avoid. You could retain the risk, take a higher deductible, or say, I'm just not going to provide the coverage. Most clients are probably not going to use avoidance, control, or retaining them. So, but you can disclose those alternatives because they may make a difference. They may say, oh yeah, I can do that. Or, oh yeah, it will be cheaper for me to install fire extinguishers or fire sprinklers or an alarm system. It increases the transparency of your transaction, which is what you want. You want them to feel that you're being honest and open with them. Reinforces the suitability of your client's decision to transfer the risk by purchasing insurance, because obviously it's in our best interest for them to purchase the coverage from us instead of not, and helps you differentiate your insurance practice based on your ethical focus. You're giving them options. You're telling them different things they can do with their money and their time and their resources. Most clients, when they understand the alternatives, will choose to insure because you like to sleep at night. And the cost benefit analysis is usually pretty clear. When you choose to insure the risk, you're ethically required to make a balanced recommendation. What do you think we mean about balanced recommendations? What kind of things would need to be in there to make it balanced? Weights, pros and cons, cost versus coverage, costs, disadvantages, concerns. So you're balancing the features and the benefits with the difference, the costs and the disadvantages. Provide quotes for all coverages the client could potentially need, because they can always say no. That's where my little checklist always came in. Well, they don't want it. Well, they can sign off it and date it, and they were offered this coverage, and now you have this in your file for when they have that claim that wasn't covered, that would have been. Consistent with the ethical requirement, insurance producers provide a full disclosure of all material facts. You need to disclose the cost of these coverages, because sometimes the costs may be prohibitive, right? They may need to figure out a higher deductible or changing the coverages. Direct cost and any indirect costs, and any disadvantages or concerns that might come along. For example, if you recommend an annuity and it has a surrender charge, which they usually do, you need to disclose the reduced liquidity such surrender charges impose. Because if you're buying an annuity, you're expecting it to be paid out over a certain period of time, a certain amount of money. Well, if you surrender it partially through, that's going to reduce that money, because obviously the person that's issuing the annuity is counting on that money and those funds being in the account for a certain amount of time, which is how they're making the money to pay you the annuity. Special disclosures for replacement coverage and impaired clients. So if you're trying to replace it, we do that every year, right? Everybody has cycles. Everybody goes and shops their coverage, and you're out there busy shopping to your clients to different carriers, because they're out there trying to find more different coverages and save themselves money. Because to be honest, that's what all this shopping is about, is saving money. They don't really understand the coverages in many cases. But if you've got these replacement coverage, or you've got an impaired or disabled client, then your disclosure requirements are more strict, aren't they? If they may have a hearing disability or a vision disability or a cognitive disability, you need to bear in mind how you're going to present that information so that they can make an informed decision. So you may be talking about canceling or surrendering an existing coverage and buying new coverage, because those of us that are in the life industry know that that's how people make their money, right? They go out and they sell a new policy. They're not getting any money off of the policies that are still in effect, so they got to go out and sell more new policies. That's kind of why life insurance salespeople are short-lived in a lot of cases, because they sell to all their family and friends the first year, and they stop making money because they're not making a lot of money from the continuation of those policies. Been an ethical issue in the past for some people as well, canceling policies and then writing it with a different company. Well, you may lose surrender premiums. You may lose your suicide clause in those kind of policies. So you must disclose all the material facts. It could be a complete comparison of all the material elements of the coverage being replaced with the coverage being proposed. Advantages and disadvantages of continuing the insurance coverage or enforced. If you've got a claims-made policy, you've got issues like that, don't you? With making sure you have, continuous coverage and the same coverage because of disclosures, and when you find out the claim and when the claim is reported and when it occurs in what period. Listing advantages and disadvantages of the proposed coverage as well as the existing coverage. And of course, whatever is the material is going to depend on what type of coverage is involved. Premiums and coverage limitations and coverage limits are going to be very key in all of these areas. Maybe it's in deductible, co-insurance, replacement cost versus actual cash value, market value. If we talked about life insurance, we talked about cash values, dividends, surrender charges. And contestability clauses, suicide provisions are also involved in life insurance, and those dates would need to be disclosed. If you're talking about disadvantages, you need to address any loss of grandfathered tax benefits, the imposition of surrender charges, and any liability for tax penalties. If you're working with an impaired client, it's not providing disclosure of additional information. It requires ensuring the client understands the content of the normal disclosures you have. Is it in the, and it may not even be an impairment, it may be a language issue. Somebody that can't read English or can't understand English very well. You may need to have it interpreted or translated for them. What kind of impairments do you think you have when you're working with clients? What kind of vision loss? We kind of talk about this hearing loss and cognitive impairments. Very common. I mean, you've got a lot of older clients, especially. They don't hear as well. They don't see as well. They may not understand you anymore. They don't do email. Hard of hearing but one a minute. Yeah, there you go. I can't hear you, but I'm not going to tell you that. If you think a client has vision loss, you have to be aware of this and ensure the material you provide can be read. Maybe it has to be larger type. Maybe they need an audio vision. No email or don't read email, right? Doesn't use internet. I mean, a lot of things, right? You may have to have a client who has a profound and uncorrected hearing loss or with diminished cognitive abilities might have more significant problems. You may need to have a third party, a disinterested third party to be present at future meetings so that they can understand and help them, you know, maybe a family member, maybe a business associate. And yeah, it's just like Tina says, some don't like to tell us they have a disability. Some don't want to admit it. If you believe on the basis of clear evidence that the client cannot properly evaluate a recommended insurance transaction because of an impairment, and the client refused to permit someone else to be present, you might not want to continue the sales process because it's only going to end badly for you. But you can have a family member, a professional advisor, their attorney, their accountant. Any one of those people could be brought into the meetings to be part of the discussion. Let's talk about suitability. What would you say if you visited your doctor with complaint of a difficulty breathing and they immediately began putting a plaster cast on your arm? I need a plaster cast on my tongue. Most of us would probably seek a different doctor very quickly, right? There's a commercial on TV and say, "Oh, hello, Carol. My name is Jane. Oh, which arm are we working on today? No, it's my leg." You know, I would at that point get up and walk out of the room. I'm not going to have surgery. I mean, we've had cases of that, right? People getting the wrong leg amputated or the wrong surgery done. So it's important. So we didn't think the actions were appropriate for our condition. And that's what means suitability means. The treatment is appropriate to the problem. It's been a legal requirement for many years, and the recommendation involved a variable insurance product, since variable products are considered securities. And more recently, several states have imposed a legal duty of insurance suitability to beyond variable insurance products. So some products, when sold to clients who are particularly vulnerable to unethical sales practices, such as deferred annuities and long-term care insurance sold to older clients. So those are things to be aware of. Most of us probably don't deal too much with that. So the legal requirement that an insurance producer recommend that only suitable products continues to apply only to specific products, but it's not true of the ethical requirement, is it? You still have to recommend only suitable products and sell only suitable products for any transaction. What kind of things do you need to consider when we're talking about a suitability analysis for an insurance product? You need someone who listens and works with you as an advocate. Please don't lose my sense of humor. That's what I live for here. What's important to the client? Cost. Does it meet the needs? Can they afford it? Assets. These are all great answers. Of course, you guys, this is a great class. You guys are really really participating. Appreciate it. Believe me, as somebody who teaches a lot to classes of people that don't ever respond, this is refreshing. How can I get the most tailored coverage to fit their needs? Listen to their needs. What a concept. Listen to people, huh? So here we go. You guys kind of hit a lot of these on the head. Clients' needs and objectives. What is it they need? What are they looking for? What are their worries about? Do they care if they have a $10,000 loss? Can they afford that deductible? Are they really only worried about a major loss? Speak to them about their assets and cares. Match applies apples to apples for the client. So client's ability to understand and evaluate the product, their ability to manage the product. Is it something where they have to do reporting form, where they're supposed to report their sales every month, or their workers' comp payments every month? Things that some people just can't deal with. If somebody's not going to fill out those reports, well, you better not give them a reporting form, because there's so many bad things that can happen when the reports are not filled and not kept up to date. Their ability to meet the client's product's ability to meet the client's needs and objectives. So you must consider both the client and the product. You need to consider three issues when talking about the client: their acknowledged needs and objectives, their ability to understand and evaluate, and the client's ability to manage the product. Will it meet his or her needs and objectives? Is there a fit between the client and the product? If you can't find the fit, the product is probably unsuitable for your client. Sometimes sales are accomplished in a single meeting. Sometimes it lasts forever, right? It's dragged out over all kinds of meetings and proposals. Then you go back and you refine the proposal. Then you bring it back. Then they come up with something else that they forgot to tell you about. And you go back and you refine the proposal. So at least one of these meetings is designed to obtain client information, which the nature will depend on what the client is doing and what the insurance product is. If you're arranging for property insurance, you hopefully will have all the identity and type and value of the property that the client wants to insure, and their needs and objectives concerning the property. What are they worried about? Are they worried about fire? Are they worried about flood? Are they worried about hurricanes? What other information might be needed if say, for example, a life insurance policy? What other kind of information might you need? Health info, age, health, medical conditions, medical history. Do they smoke, right? Good answers, good answers. And current income, and what are their assets? Because if you've got enough assets, you don't need life insurance, do you? You've got enough assets to cover your expected lifetime and your possible needs and long-term care. You don't need the insurance policy, do you? Again, their needs and objectives, their ability to understand and evaluate the product. A personal situation where they have dependents. If you have nobody to give the money to, well, then you don't need as much insurance, do you? Liabilities. You have an ongoing mortgage. I mean, that's what everybody says when you have a mortgage, get a mortgage or have kids. You need to address your insurance needs. What's the risk profile? Are you a skydiver? Are you a race car driver? What kind of things do you do that might might hasten your demise and increase the need for the insurance? But the insurance producer must determine the client's needs and objectives. We talked about this multiple times. What do they need? What are they looking for? Because if you're trying to sell them something they don't want, you're just wasting your time. Their ability to understand and manage the product. We talked about this before. Give them enough information so that they can understand what they're going to get. And you need to engage in a candid discussion sometimes of what the topics are. What topics need to be discussed to ensure a client has obtained enough information to understand the product? What do you need to talk about? Vicky says everything. Thanks, Vicky. That's helpful. I would expect no less. Needs, habits, assets, wants. I'm here to see. Yeah, you're here to serve. Risks, gaps, assets. What are they looking for? Affordability. All great answers. So this risk that's being insured, the policy benefits, what are they going to get out of it? The provisions that may limit these benefits. We talked about contestability clauses or suicide clauses in life insurance, for example. Perils or losses not covered, flood, 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 flood. It could be a major one. Non-guaranteed factors, we're talking about like life insurance or annuities, like interest rates and expenses. Those are going to change. Contingent charges. Yuck, yuck, yuck. Stop it on the flood. Have you been flooded, Tina? That's true. You were in our flood webinar a couple weeks ago. All right. So a broad range of issues needs to be discussed with a client to ensure he or she is given sufficient information to understand the insurance product being recommended. You need to be absolutely clear about what is being insured and the benefits provided. Equally as important, your discussion must cover any perils or losses that are not covered, exclusions, any limitations that because of exclusions, deductibles, or policy waiting periods. Talk about business income coverage. How long do they have to be out of operation before the coverage kicks in? Does it go back to the date of the accident, or does it start 10 days later, 12 days later? What's your limitation? Is it actual loss sustained, or do you have $100,000 cap and you're at once that you reach that cap, you've got no more business income coverage? What are the causes of losses that are determining that? I've been doing this for too many years, huh? Life insurance or annuities, you talk about anything non-guaranteed. Talk about the expenses because that can increase. We've got inflation, expenses of taking care and maintaining the policy is going to increase. Interest rates go up and down, up and down, up and down. Well, that's going to change what the dividends are going to be, isn't it? Or the interest rate that's going to apply. There may be a guaranteed minimum. So you need to assess the client's ability to manage the product, as we discussed. What do you think you need to talk about when you're talking about whether the client can actually manage a policy? Chad. Affordability. If they can't afford it, they're not going to buy it, right? If I have to take out a loan to buy something, I'm going to think about more whether I'm going to buy it or not, right? Cost and deductible, premium, client responsibilities, payment plan. The premium affordability, and can they make investment related decisions? Is it a policy that they can have input put on as to where the money is being put? Or if it's not even a policy, but maybe a benefits plan, or an IRA or retirement plan. Can you direct where you're putting the money? Or is the advisor, the people who are handling the money, making all the decisions? What's your risk tolerance for that? I mean, with my husband, he does all the investment stuff. We talk to financial planners and they say, well, we can give you just about what you're getting now. Well, what's the point of paying somebody money to be in the same place? For me, I would have a financial advisor because I am no good at any of that stuff. But it's one of the things that you have to think about. Can they make the decisions? Can they do these things? Health insurance, disability insurance, property and casualty insurance. The only factor maybe is whether they can afford the premiums. Are they going to go up? We talk about some life insurance policies. They're not level. They go up as time goes on. So you may be getting older and closer to retirement or retirement and having policy premiums that are skyrocketing. That could be an issue. Insurance products that are considered securities like variable life and variable annuities, they have to make investment related decisions and they may not be able to do so. Then it's probably not suitable. Client investment related decisions are those that are related to initial and ongoing asset allocations. Where's the money going? The use of cash value management tools like dollar cost averaging, and the transfer of assets from one sub account to another to change the level of risk. Do you balance where your account is? You look at the stock market; it's going up and down, up and down, up and down. I don't want to have anything to do with that stuff. Just put my money in the mattress. Product's ability to meet client needs and objectives. The overriding criteria or an insurance product suitability is the fit or fits between the clients and the products. So your suitability assessment must also include this. You must have the client be able to meet his or her needs and objectives at an acceptable level of risk. So determining a property and casualty product's ability to meet the client's needs generally requires only that the recommended coverage be consistent with the type of property, nature of the risk, and the client's ability and desire to shoulder part of the risk through any deductible. Life insurance policy's ability to meet client needs may require you consider how long the client will need the death benefit for, how important the accumulation of cash value is, how important the flexibility of premiums is, and whether a deferred annuity product will enable the client to meet his or her needs and objectives. So you may have to consider various features of the product. There may be a death benefit. What happens if the person who's the annuitant dies? Who gets the rest of the money? Does it keep going to the beneficiary? Is it reduced? The principal and interest guarantees, are there any guarantees? Surrender charges and their duration. So that all that impacts liquidity. This is the end of module 2. Let's talk about our summary of what we've talked about. Clients need to completely understand what their recommendation is for their insurance transactions. So we have to make a full and fair disclosure of all relevant and material facts. Material facts are those that can be reasonably expected to affect the client's decision concerning the recommendation. Information about the insurer, talk about that. That's primary importance. Is that insurer going to be there and be able to pay the insurance claims? The coverage, is it what they need? Is it adequate? Are they going to be stuck with a co-insurance penalty? Are the deductibles too high for them to manage? And in the case of something like life insurance, any illustration show the possible range of results of what your income can be. I think it's interesting that we're about 50-50 split of people who work remotely and people who don't work remotely. Very interesting to me. Tax treatment, we talked about that before too. Is it deductible? Is it not deductible? The premiums or the benefits? When they're going to be when they're paid? Some of us do both. I don't do. I haven't seen my office in 10 years. I'm sure they all miss me. The two of them that are there now, we're all over the country. So we talked about ethical duties for producers to discuss clients' alternatives to insuring the risk by avoiding, controlling, or retaining it. The thorough discussion of these alternates and alternatives for managing the risk really increases your transparency and increases your credibility with the client. You know what you're talking about. You're in their best interest. You're trying to help them save money and still protect themselves. And it may also reinforce the appropriateness of this is why you need this coverage. They say, oh, I don't need it. I don't need it. Well, maybe you do. So if you inform the client fully about other ways they can conceivably deal with their risks, the suitability of things may become more obvious. Like you're not going to retain this. If your place burns down tomorrow, what are you going to do? If you're retaining the risk and you don't have the money to rebuild it or to live somewhere else or to go somewhere else, you might want to buy the insurance. Just saying. And we talked about being balanced in our recommendations. You need to present the both direct and indirect costs of the transaction. Are there going to be penalties for withdrawal or changing the policy? Or you have a claims made situation, retro dates that might be impacted. As well as any disadvantages for if they implement your recommendation. Talk about disclosure requirements, considering other measures that need to be taken when recommending a replacement of policies and working with impaired clients. Primary ethical requirement for replacing existing coverage is that the transaction must be in the client's best interest, not just so you can get a trip to Hawaii. But I'll take a trip to Hawaii. Your disclosure requirements when making a replacement recommendation are designed to ensure the client is fully informed with respect to the transaction to enable the client to arrive at the reasonable belief that implementing the recommendation is, in fact, in his or her best interest. You have to try three important disclosures. Three, I can count to three, yes. Show a complete comparison of the recommended product with the product to be replaced. Now you're covering all your assets there, like a formal proposal. And in P&C, we do that all the time, don't we? We put together these binders of coverage and saying, this is what's going to happen. This is what you're going to get. And you may have a comparison there with existing or with a competitor, depending on the situation. Advantages and disadvantages of continuing the existing coverage, as well as advantages and disadvantages of the proposed coverage. And let the client decide what they want to do. It's not up to you to tell them what coverage they want, unless you want to be the one to pay their claim when it's not what they needed. And you told me to pick that coverage. They're fully informed about any insurance recommendation. It's great, but if you have an impaired client, it could be a difficulty. And they say, okay, when you ask what you recommend, what do you do? What do you do? If somebody says, what would you recommend? How do we ethically handle that? Anybody have any thoughts? Were you? I guess it really depends on what your relationship is with the client too. Give them your honest opinion. Describe the coverages, but let the client needs to make the choice. Because there are people that will do whatever you tell them to do, right? Rehash pros and cons. Or maybe suggest that they talk to another professional. I cannot legally advise you what to purchase, but you have to make the choice. Give options, let them choose. Comparisons suggest they review them. Educate, educate, educate. All good suggestions. So yeah, it's a tough question. Because you don't want to do anything that's going to bring you or your company into exposure. If only insurance had to take CE classes. Ah, yes, talk to their financial advisor. You don't want to expose your agency or your company to E&O or financial risk by being the one that said, oh, I told them to do that. Because you know that that's what they're going to say. You told me to do this, and it's not right. We're not lawyers. We can't give them legal advice. It's very difficult. Get it in writing. Yeah, get it in writing. I wouldn't tell them anything specific. I only give them the options available. Yeah, they just agreed. It's not easy. If it isn't writing, it didn't happen. Like, well, exactly. And that's why I always made these people, the guys that were coming in with the request for proposals on their napkins from lunch. I said, I don't care what information you have. I need it in writing. I need them to sign their own application. You don't sign their application, and I need these checklists filled out saying I was offered this coverage. I do not want it, and signed it and dated. Document, document, document. Yeah, napkins worked in the old days. Yeah, I guess they did. And I don't mean to go to the window and trace it. So did handshakes. Yeah, handshakes used to be enough, right? Not anymore. Everything's so litigious. How many ads do you see on TV about lawyers? Were you injured in an accident? Did your insurance company screw you? Blah, 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 blah. Come to us before you talk to the insurance company. It's sad. It's very sad. So you have the same ethical duty to ensure you're fully informed. Doing that may require additional measures. We talked about the different kinds of impairments: hearing, visual, cognitive abilities. If somebody's not blind, you may need to have typeset larger that they can see it, or you may have to have somebody read it to them. Profound and uncorrected hearing losses or diminished cognitive abilities, so that they cannot understand, you must still ensure that they're fully informed. Get somebody else in there with them, a trusted advisor, ethically, a disinterested third party, not your friend in the next cubicle. That's not gonna fly if in a legal case. So, well, you guys both have the same interests at heart. You're making your money for your company. If they don't agree to such an invitation, you should really walk away from it. Because especially given the double whammy of the fact that they have cognitive issues, they don't understand, they may not remember anything you told them, and the fact that there could be a claim, and how are you going to, say, well, I didn't understand it, or somebody, their lawyer, is going to come to you and say, well, this person can't possibly make a decision. They're cognitively impaired. How could you sell it to them? That was unethical. I mean, we all have seen the stories of how things go bad, and even when you're trying to do the right thing, other people are not always going to be doing the right thing. They're going to be in it for themselves, aren't they? We talked about suitability. There's no legal requirement for suitability in certain cases, but you have ethical responsibility to make sure that the coverage you're selling them is always applicable and always relevant to what they need. There must be a fit between what the client needs and what they want and what you're trying to sell them. While you have your suitability analysis, you consider the various client and product factors, their needs and objectives, their ability to understand and evaluate. That goes back to our cognitive issues. It says, exactly, don't be afraid to walk away and wish them well. Finding a better fit for an agent. Sometimes losing $1,000 now can save you $10,000 plus later. Exactly. And reasonable person standard. What's the reasonable person? I wouldn't know, but there are reasonable people out there. And their ability to manage the product. Can they pay the premiums? Can they fill out the reports that have to be done every quarter or every month? When considering the product side of the analysis, you simply need to show that the product is capable of helping the client meet his or her needs and objectives at a level of risk the client can tolerate, which includes a level of premium that they can tolerate. Try not to cry, but this concludes Module 2. Any questions or comments before we stop for 10 minutes? If seeing none, see you back in 10 minutes for more fun and games. We haven't lost anybody, which is really good. Okay. Now we're going to talk about a little bit, even we don't, continuing education doesn't involve sales and marketing type of tools, but I think it's important to mention some of the things that we do and how we can be more ethical in our business cards, things like our business cards, our stationery, our flyers, our brochures that we do, our advertising, mass mailings. All these things have an impact on our image and how the public perceives us. And we need to be cognizant that if you've got designations, you've got things like that, or you can put them on your cards, but if you don't have them, you shouldn't be putting yourself out there that you're a CPC or you're a certified financial planner or whatever it is you're putting on your cards or stationery. So just a short, if you want to go through a whole that, you can go and take the 4-hour class. So I mean, you need to identify the producer's role, and the insurer's representative. If you don't represent a company, you certainly shouldn't have it on your business materials. Exaggerating, saying you have more experience than you do. Being misleading. promising benefits that don't exist. Licensing credentials, all these things come into play when you're talking about ethics. Or not maybe saying the fact that you're also an accountant, or you're also a certified financial planner, or you have a stock in the company that whose products you're selling. So there can all be ethical breaches in those kinds of activities. So now what we've all been waiting for, because I know I sent you these case studies, because that way you can see what it is that you're talking about, and have a chance to participate more fully. So let me get through to that. Analysis. So we're going to talk about some unethical sales practices. And we're going to try to kind of tie in all the things we talked about in the first 2 hours. And we'll try to see if we can come up with some answers or some suggestions. Up to this point, we've largely been one of acquiring familiarity with ethics and how it applies to the important job of dealing with our clients and delivering professional insurance services. We talked about gearing our practices to focus on ethics and the importance of such a focus on our companies and our clients and ourselves. Then we looked at the foundational principles, the 6 foundations, and what the principles require of us. Talked about competence, integrity, fairness, diligence, professionalism, and confidentiality. I'm not going to read them all to you again, because I think we've read them enough and you all know how to read. So then we talked about the ethical concerns of suitability and client disclosure. We talked about how the clients need to be fully informed in connection with recommended insurance transactions, so we can make a full and fair disclosure of all the material facts concerning the recommendations we make. Facts should be disclosed to the client, including all the important information about the insurer, how financially stable they are, coverage proposed, the illustrations, especially in life insurance and other kinds of financial products, and the tax treatment. Talked about requirements to disclose client alternatives, discuss the costs and potential disadvantages or advantages of implementing recommendations or staying the same, and any additional measures required when you recommend insurance replacement and when you work with impaired clients. We talked about that. Then we talked about suitability, making sure that it's always been ethical, that the insurance producers deliver their professional service and make sure that the clients get a suitable product, that there's a fit. And as somebody's saying, put in the chat, I think sometimes there's no fit for a client. We talked briefly about how you have to be ethical in your use of business cards, stationery, and marketing materials. Now we're going to talk about the scenarios. We're going to see if we can find out the unethical sales practices. Talk about the ethical requirements that were violated, and determine what the insurance producer should have done. I think I've got it up here. Ellen Hardesty is the first one. Get it now, this is more of a life insurance one, but it gives you an idea. She's a 68-year-old agency client with a good retirement income, substantial liquidity, and no debts. She has $969,000 in liquid assets, $316,000 is the cash value of a 30-year-old fixed deferred annuity. Sharon, the fixed deferred annuity, which means you're going to keep going and keep getting the same amount. Sharon the insurance producer, discussed with the client the new benefits now available in modern variable annuity contracts, guaranteed living benefits, and enhanced death benefits that were not previously available. The client wants to continue the income tax benefits she currently enjoys and leave the cash value to her nieces as a legacy. She has no current intention of annuitizing the contract. But based on Sharon's recommendation, the client has surrendered her existing fixed deferred annuity and has purchased a new variable annuity with guaranteed living benefits. Can you evaluate what your, what might have been ethical or unethical about what she did. I know most of us don't do life insurance, so you have a fact-finding form in your packet. This is what you would do. You go through and see, does she have the assets to meet the short-term cash needs? Does she have investment objectives? Is she going to benefit from tax deferral? And these are kind of the questions that you would ask and go through. So Bob and Carla Evans is our second scenario. They've been married for 50 years. God bless them. They've been agency clients for almost that long. Bob is 74 and retired. Shirley has never been employed and outside the home. Let's see, we got some questions here. Withholding pertinent information is equally as bad. This is just a sample for a example for kind of thinking about ethical behaviors. I know not all of us, not most of us don't have life insurance licenses, so just to give you a feel for it. So they want to avoid the income taxes they've been paying and begin receiving an income when he reaches 75. Barbara, the producer in the agency, told him to withdraw $80,000 in IRA funds and $29,000 from their savings account and invest in a non-qualified deferred annuity. So some of the problems of that would be there's no liquidity for a deferred non-qualified annuity. It's only a short-term objective, and there would be tax concerns for going with that. Next is a homeowner's scenario. Goes to that. There we go. Jim has had full homeowners insurance with the agency for several years. The policy provides full replacement coverage if his house is destroyed. He just lost his job and wants to reduce his premium rather than be required to cancel his policy. As the person taking Jim's phone call, you suggest to him that lowering his premium might be easier than he thought. All he needs to do is reduce the stated value of his insured residence. Jim is delighted. By reducing the stated value of his residence, he lowered his annual homeowner's premium by $500 and will be able to keep his coverage in force. Okay, people, what problems do we see with this? No, no, no. Thank you, Vicky. That's very helpful. Yikes. No, I don't like the front. I did. I went all it bounced me all the way up to the top of the chat. I apologize. Uh, it's not covered correctly. It's covered correctly, but claim arise, not ethical at all. Underinsured. Then the did over the should times loss won't meet the co-insurance provision. Exactly. Sure, he's going to reduce the premium, but when he has a claim, who's going to pay that difference? And let's say, well, I'll say, your E&O will pay for that because you recommended it to him. And it's probably will be that person's, might be their job if they were not authorized to make that kind of decision for them or make that kind of recommendation. And who would? I mean, who would ethically do that? Say, yes, you can do this. Maybe increase the deductible would be my thought. Any other lost my chat again. Here we go. Likely ignorance proves that I recommended it to him. He lied. He. may trigger ACB on loss settlement, reduction in other, as another thing to point out too, reduction in other coverage implements. If he thinks this is expensive, welcome to the FAIR plan. Oh, yeah, I think that's all the responses we had. So, yeah, we don't want to go through and recommend lower coverage to save money. That's just, but unfortunately, there are too many out there, aren't there, that will do this. We have another one. Another new message. Let me see. To make them sign off if they want to lower coverage. Absolutely. He thinks is what you could do is see if the carrier can stretch out the payments over more installments instead. You just want to try to do everything that's not going to get you in hot water and not going to put the insured in a terrible situation where they cannot recover if they have a loss. All right, Joan Kitts. She's been insured for automobile insurance coverage with the agency for a few years, has been involved in several auto accidents during that time, resulting in numerous claims and numerous damage claims. Because of her driving record, the insurer plans to increase her premium substantially. The producer, realizing Joan will move her coverage to a competing insurer with poor claims paying history and ability, plans to reduce her liability coverage limits. By reducing the limit on her automobile liability coverage, she will be able to keep her client's premium at about the same level. Joan will never know, and the client will be able to keep her coverage with a high-quality insurer rather than one with a spotty claims paying record. I hope the agent for Sierra has E&O. Oh, no, 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 as Vicky said before. Another yikes. Perhaps it's best to let this client leave. But, I mean, as bad as this is, these kind of situations are, we all have seen people that will do these things. Why carry a poor risk at the expense of the company? And that's a great point, Jeffrey. I mean, I think I canceled that, producer Robert says, because if you're doing that and you come to a claim situation, it's going to involve everybody, right? It's going to pull in the claims department. It's going to pull in the attorneys. It's going to pull in the company. There's going to be all kinds of additional expenses for litigation. It's going to be bad feelings. Your client is going to go out and tell everybody what a terrible producer you are, or what a terrible insurance company you are, and like all these bad stories that you see of people saying, "Well, my insurance company did this to me, or they tried to do these bad things to me, and I'm paying my premium for years and years and years and years and years, and I'm not getting any relief from this. That I paid my premiums. I should be getting my coverage. Liability limits probably need to be increased if she's a greater risk to hit someone or something. Goodness. So it's just, I mean, these are situations that are unethical, things that should not be done. Does anybody have any other things that they wanted to share of ethical or unethical situations? And go into more depth on some of the other ones. As an underwriter, I would have non-renewed the policy, buy a personal umbrella to sit over the primary auto limit. Yes, but you have to make sure that personal auto limit is high enough to fill the requirements for the personal umbrella, don't you? Because I mean, and too often that happens, right? Your underlying limit has been reduced, or it's expired. They're not concurrency in policy terms. It just comes up a lot of times. I mean, people say, "Oh, I'm going to buy coverage," or "I need an umbrella because they have a contract, or they need something happen." They're sitting there going, "Oh, well, I need more coverage." Our reinsurers have requirements. And one place I worked, a former account manager put almost everyone 1 year with MAP free for the gift cards. Those kind of things happen, don't they? Driving school. A lot of things that could happen. Well, we can go through and talk about what they say about these different scenarios since we saw, unless somebody else has another example. I had I knew somebody who was a CPCU, and this impacted me personally because it was my ex-husband's employer who decided to spend all the 401 instead of putting the money for the either it was a 401k or one of the benefit plans into the plan, they put it into a casino, as in gambling away all their money. So when it came to trying to people trying to recover from the plan, there was no money in the plan. And that's kind of unethical, isn't it? I have my son-in-law, same thing happened. They were taking money out of his paycheck for health insurance that they never purchased. They weren't an insurance company agent or producer, but it's the same kind of thing. You've taken the money, I mean, and have you've seen that of situations where people will take agent. That's why you say agents should not be taking the premium from the insured because the insured thinks it's paid once they hand it to the agent. But technically, in many cases, correct me if I'm wrong, because I often am, that it's not paid until it's either put in the mailbox to the client, to the company, or in some cases, it's not until the company receives the payment. So if I hand my money to my agent and they put the money in the desk drawer, they put it in their account to pay later, and that money never gets paid, what happens to my insurance coverage? I could have no coverage, right? Canceled. No non-pay cancel, not good. Agents E&O, no coverage. You don't have any coverage. Not paid until the company receives it. Problem with the agency. And that's from a company person. So, and have you been a victim of that? I had to fire somebody who was she was overworked, poor soul, had too much to do. So rather than asking for help to those of us who actually were working, 9, 10 hours a day and helping our clients, she took the claims checks that came in and stuck them in her desk. And so after I fired her and I cleaned out her desk, I found all these claims checks that were not submitted to the clients quickly. So saving for a rainy day. Now she's not overworked. Yeah. And but then that goes back on the agency too, doesn't it? Because if you don't submit it to them, send it out to them on time in a timely manner, you could be sued for not for what's it unfair claims practices, right? Oh, we're holding we're holding their money. We're holding their money. And the company, again, we're going to come out with the litigation and it's going to go all over the place. And it's going to be an E&O issue because we were supposed to, it's our duty to process these things in a timely manner and get them out to the client. So the claim is paid, the claim is settled. The company is thinking the claim it is settled. The claims adjuster is thinking it's been settled. And the agent's sitting there with dozens of claim checks sitting in the bottom drawer of this woman's desk. So that was one of my fun times. Actually, those are two, that one and the other one that I talked about, but the guy who instead of paying the money to the benefits into the whatever it was, the 401k or the benefits plan, it went into his gambling habit. So is that really what passes for fun? Yeah, that's my life. That's my fun. So we'll go back and talk about some of the analysis of the ones that we had talked about since we still have a couple minutes before our 50 before our time is up. We talked about the first one was the Ellen Hardesty. her recommendation and sale of variable annuity by considering some of the decisional factors listed on that sheet that we had. Did she have sufficient liquidity to meet her short-term cash needs? We can go back to that page, I think. And you all got the copy of the sheets. She has, not counting the funds placed in the variable annuity, has 653,000. So she would certainly appear to have enough money to handle her short-term cash needs. I would hope so. She has no current interest in using the annuity funds and expects they will become a legacy for her nieces. We can conclude that her objectives are long-term for investment. So they extend beyond her lifetime. She wants to pay for her nieces. She might indicate that she'd be likely to benefit from tax deferral. She files an unmarried, if you look for, she's filed on the form you have, she files as an unmarried individual. 102,000 income places her in the 33% federal tax bracket. She only has a few deductions. So her total tax bracket may approach 40%. Shrink wrap the microwave in the break room or something. I work at home, so if I shrink wrap the microwave, my husband would have a fit because he's in there all the time. So. No dependence on substantial assets. She doesn't really need insurance to meet family needs, which is why a lot of people buy insurance, right? For family needs, for a mortgage, or for paying for their kids growing up. She has 380,000 in the IRA, so she's been taking advantage of individual retirement accounts. She doesn't have any earned income because she's retired, so she can't make any more contributions to her IRA. So it might have been suitable. But some of the problems are the tax treatment of the surrendered annuity funds, the money from the original fund annuity, and not disclosing that there could be tax issues. So that's not really relevant to most of us since we don't do life insurance, but just to give you a feel for that. Back to Jim Whitaker, our homeowners guy. There are both coverage and disclosure problems in this, right? We talked about loss of replacement coverage. Personal property coverage automatically reduced, right? No disclosure of what was going on. The stated value of his residence must be at least 80% of the actual property value in order for the policy to provide for complete replacement. By reducing the stated value to a level that may be lower than 80% of the true value, destruction of his house may leave a large part of the replacement cost uncovered, which we talked about, right? In addition to the reduction in the stated value of Jim's residence, the reduced limits will also automatically reduce the limits applicable to his policy's personal property coverage. Somebody mentioned that in the chat. How about extra living expenses? That could be reduced. So a lot of things could be impacted. His premium savings were the result of a reduction of his coverage. He should have been made aware of this, but the producer would need to disclose this and saying this is what's going to happen. And it didn't look like that happened, right? Any other questions or comments on the homeowners scenario? Go on to Joan, our driving and automobile one. So Joan's poor driving record is about to result in a big premium increase, isn't it? Since that increase is likely to cause her to move the coverage to another insurer, one with a marginal claims paying record, the producer has lowered her automobile liability coverage to reduce the premium. As a result, Joan will be paying about the same premium, even with the increase. What problems do you see in this? And dishonest, right? Favorite. Hopefully Joan reads her deck page when she gets the updated policy. Paired driver equals more claims. Uber, okay. Talk about what to do if an agent is a friend of the insured and goes to the insured's house and realizes the insured lied to their insurance application. It has a pool, trampoline, and how the agent handled it? Okay, that's a good question. If you find out customers read their deck pages, what? Yeah. She's going to be upset with the producer when the next claims aren't paid. Turn in your license. Pitbull too? Probably, yeah. So what do we have? What are your suggestions? If you're in that situation, you go to visit. Yeah, that's why the carriers are doing inspections. And that's why we recommend it. Our company does a lot of inspections for that reason. If as an agent, And it's incumbent upon you to know what it is you're insuring. And if you know you have to advise the carrier, I would say yes. Joan clearly didn't read anything, road signs, speed limits, etc. Why would she read the policies? Yeah. But company is going, that's why we talk to say that you need to do inspections. You need to know what your risk is. Every year, have an annual renewal questionnaire. Do you have to change any exposures? Do you have the dog? Do you have the pit bull? Do you have the trampoline? I got chickens. Well, that could, could impact my insurance because depends on what I'm using the chickens for. Am I using them to feed myself or am I selling them out on the streets? Am I gonna kill the chickens and try to sell them? That's gonna impact what kind of insurance I have. Do I put if I put my maple syrup orchard back in production? So sell the eggs and make a ton of money. Not with 8 chickens, eggs to finance your future. Yeah, so hobby farm versus working farm. Where's the line? But if you don't talk to your clients, if you don't do the questionnaires, I know it's a pain in the neck and it's a lot of work, but it's a bigger pain in the neck if you come into a claim situation and your E&O is standing sharing in the face and your boss, if you're a producer, saying, why would you do this? Voodoo rituals. Okay. You guys are really going off the rails. You can tell it's been almost 3 hours in this class because you're all gone insane, just like me. But what would you do? Would you tell the company? Or would you maybe suggest they do an inspection if you're short trip? Yeah, okay. Would you suggest to them how ethically what's your response? I've asked them to do an inspection, right? I would. Hey, you have an obligation because you're an agent of the company. You have an obligation to the company as well as your client. That's what's so difficult about being an agent because you have both responsibilities and sometimes they don't match, do they? Sometimes they're conflicting. Get rid of the slides and stop sharing because I'm tired of that. Zero. You have conflicting needs, conflicting you alliances, things you want to do. Integrity, that's where integrity comes in. Any other types of claim situations or analyses that you've come across or ethical dilemmas that people have been involved in? Now we can go back to we still have a couple minutes here. Talk a little bit more about the false claims and the advertising and marketing type of things. So producers' business cards and stationery can permit the client to do. You should be able to identify the producer's business as an insurance producer, because who knows what other business companies in, and identify the insurers he or she represents. So integrity requires both honesty and candor. Talks about all the sales tools an insurance producer uses, including his or her business cards or stationery, the proposals that they do. To honestly and candidly accomplish these things with your is to identify the business, to identify who they work for, and what the company they represent. Mass mailing, advertising. We see all kinds of advertising, mass mailing of things on television about, there's all kinds of insurance ads all the time, aren't there? Well, I particularly have an interest in when they talk about giving you all the insurance you need. Well, please somebody tell me how much insurance I need. I'll gladly pay for only the insurance that I need. How do you know what that is? Could that possibly be a potential problem ethically? Not the closing prior claims. We get that a lot. I had producers that wanted to hide, telling you they have no claim workers' comp coverage and need us to place it, only to find out they overstayed a large amount from an audit. We withdrew from the account, and that was the only the tip of the iceberg. Well, yeah, if they're lying to you about one thing, they're probably lying to you about something else, aren't they? I had a producer who was trying to write a client who had, let's say, some questionable drivers. The Allstate commercials drive me crazy. Yeah. As bad as the carrier that used to advertise on TV saying all insurance is the same, don't overpay. Yeah. I just I as an insurance professional, I just sit there and go, how do you know? How do you know what claim you're gonna have? How do you know what kind of car you're gonna hit? Who's gonna tell me that I'm gonna hit a school bus full of 50 kids and that my liability limits might not be enough? How does know that to tell me? You don't know until you know. Yeah. The client's only focus is to pay the absolutely lowest premium possible. It's not me I'm worried about, it's them. I agree. How much insurance is enough? Trick question. Nothing. I mean, because that's your dilemma too. You say, well, if you have a $10 million umbrella, is that what they're going to sue you for? I suppose if you only have a $1 million umbrella, they'll say, well, we don't, we're not going to go after them. They don't have the assets. And as an insurance producer, you certainly don't want to be the one to tell the client that, because get sued for the $10 million that you told them they shouldn't buy because so they wouldn't get sued for it. Right back to your E&O again, isn't it? In today's litigious society, they will ask for all of it all. And it doesn't even matter if you're involved or not. I mean, if it's you own a restaurant, you own a bar, and somebody has a fight in the parking lot. Well, they're going to come back and sue the restaurant and the bar. It may not have had anything to do with you. They may not even have been overserved. It could just be somebody that doesn't like somebody else, but it's going to be brought in. We've agents that ask us to change valuations from replacement cost to ACV to save the insured money. We tell them to place the coverage somewhere else. Well, and you may want to tell the agents to go somewhere else too, right? What are the assets they are protecting? Cast the wide net and haul everyone, and you can be included through vicarious liability. Absolutely. And you're going to get money from somewhere, right? There's going to be somebody, hopefully some jury somewhere is going to say, oh, that poor person, they need to be paid. And let the big bad insurance company pay them because we're awful people. So, but I said I had a producer who the guys had questionable driver's licenses and had accidents, and he wanted me to submit the risk without that information. And me being the nerd and that I am said, hell no. It's going in over my signature. You're not going to be withholding information. Because once you lose your integrity, once you lose your reputation, how are you going to get it back? Being able to be honest and truthful and having people depend on you will be helpful to you in the long run. I remember very clearly one year, it was like New Year's Eve or some holiday, and it was in the afternoon, and somebody decided that they needed builder's risks coverage in Florida, like immediately, which was at that point was a very difficult risk to place. Well, and I didn't have the information. I didn't have the documentation. I didn't even have an application from this guy yet. And so I called an underwriter. I said, this is my situation. And he said, well, because it's you, I will bind it because I know that you're going to tell me the truth and you're going to get me the information I need. My favorite is like you said at the beginning of this, I one gotcha, it takes 10 attaboys to undo. My favorite is I can't sell my house for that amount, but that is what it costs to rebuild it. True. Are you selling? And there are people that sell market value policies, aren't they? And some people don't want to rebuild their house. If your house burns down tomorrow, what are you going to do? If your business burns down tomorrow, what are they going to do? When we talk about needs analysis and suitability, What are their goals? If they're not going to rebuild and replace what they have, maybe they need a different kind of asset allocation. Maybe they need a different kind of coverage. Maybe they don't need replacement costs. But if they have a mortgage on that, they sure as heck have to cover the mortgage, don't they? So there are so many considerations to be involved when you're placing coverage, and that's why I'm so glad I don't have to do it anymore, because I God bless those of you who do have to do it, because you just we had the clients. Somebody's raising a hand. Deronis, did you have something you wanted to mention, or are you just raising your hand? No problem. Just making sure. I mean, every situation is unique. Every client is unique. Some of them are going to be honest and forthright with you, which is good, and some of them are not. And when the rubber hits the road, and when there's a claim, when there's a loss, it doesn't matter if they're your friend, it doesn't matter if they've been your client for 30 years. Some of them are going to turn on you, and it's up to you to behave ethically and have your reputation intact and follow these procedures. Because if you're following ethical procedures all the time, you don't have to worry about what story you need to tell somebody, because you've got your documentation, you've got your records, you can sleep at night. Your E&O is not exposed, because we all know that these things can happen. Things happen out of our control. Things get missed. Mistakes are made, the honest mistakes most of the time, and we can learn from that. Given hopefully, given time. Any other questions, concerns, issues? We will be doing your CE. For those of you that require CE, that will be the first thing we'll do, is banking the credits. It will may take a couple days for the completion certificates to be done, but those will be done. But you should be able to check your transcripts within a day or so to see if that the credits have been applied. If you have a question or a concern, I think you all have my email everywhere. I'll put it in there again. Yes, Quimby. Vicky, we're having a couple more classes in the next couple months that are going to be filed in Tennessee. That's one of our newer states that we're licensed in. We have our next class will be on April 29th, which I think will be of interest to many of you. Would be tricks, the dangers lurking in claims made forms. We talk about ethical and being able to to come up with the right policies and the right coverages. Well, claims made is a whole other basket of worms that we may need to be aware of. In May, we will have one on picking the right farm program and underwriting. And don't forget our YouTube channel. Mary's Cassie's putting in the chat. It's free. If you like my articles, you'll luckily I'm not the one who's reading the article, so that's an added bonus. But they're all on all different topics. We do write policies, write coverages and articles on any topic, as long as we've got suggestions from you. That's fine. We appreciate everybody who has attended. We hope that you will come to the next one after the farm one in June. We have one with those of you who are in IAIP. Know Catherine Knorr. She's doing a 2-hour presentation on artificial intelligence and its impact on insurance, which will be great. And then in November, we'll be doing our educational seminar. And that's going to be the religious institutions, fraud, and then another 2-hour session on emerging issues. I will be doing the coverage standpoint, and some attorneys will be doing the legal standpoint. So we're pretty excited about that. We're also open to offering classes. If you want to run a class, contact us. We can let you know how much it costs and how much you need to bribe me to run it for you. Jan, you had
Sue,
something you wanted to mention?
I couple things. One, I want to say thanks to all the attendees. It was fantastic, and it's a really large crowd. So that's great. Sue, as always, did a great job, and we're excited about all the good work that's coming out of the MSO CE school. We're still in the soft launch of all that's going to go on with that, but we are competing for it and wanting to do it on a national basis. And Sue, as she mentioned, we're in 37 states, more to follow. And we're real proud of that. It's a part of our mission as a 501c6 and a trade association is to give education back to the industry. And we are doing what we said. So, and you're helping us. Everyone who got on today helps us prove that yet again. So I just thank everybody for attending. And I know there will be many more excellent sessions. And for those of you that need CE, of course, but for others, just to keep your learning going, because it is true that in the PNC industry, there's never a day that we don't need to keep learning. So, Sue, thank you. It was great.
Yeah, just as a reminder, we are doing all these classes and we will offer them for you. And I lost my train of thought as to what we're doing, but we're very excited about it. And if you have a designation like CPCU that you need a certificate for saying you took a class, we certainly can send that to you. Please send me your request. It probably won't be done as quickly as some of the other ones, but we will be happy to assist with that. And Cassidy, did we get all the polls in?
Yes, we did.
Thank you to Cassidy for running the polls because you can't run polls and to present at the same time. I probably could figure out a way to do it, but it would be kind of ugly for all of you. Thank you all for your participation, for coming, for putting in the chat and that really made it fun because ethics can be not so much fun. So in this, we'll be doing in this class again. I think I'm doing it. I'm glad you like the poll questions. I tried to make them generic so I can use them again, but I'll be doing this class in person next week. So it's always good to have practice, but we'll be doing it again as we trying to do it every year, but also when we get more classes. So, and more schools done. So yes, somebody says wants a certificate for IAIP as well too. Depends on how much you're going to pay me. Was it that said that, Tracy? I can't see who it was, so yes, we can certainly do an IAIP certificate because those of you that have the DAE, yeah, Tracy's holding my Girl Scout cookies hostage. But those of you that have your DAE,